As the demand for EVs continues to rise, it's essential to understand how you can qualify for the federal tax credits and potentially save thousands of dollars. So let's get started. In this video, we'll break down everything you need to know about tax credits for your new or current electric vehicle. So how does a federal tax credit work for your EV? Well, it's not as simple as a yes or no question. Let's dive into the details. First and foremost, the tax credit is dependent on your income. It's currently only available to individuals reporting adjusted gross incomes of $150,000 or less, $225,000 for heads of households, or $300,000 for joint filers. Do you fall within those income thresholds? Great, moving on. There's also a cap on the MSRP of the vehicle. The price of a sedan cannot exceed $55,000. SUVs, vans, and pickup trucks are capped at $80,000. Even if the price is right, not all vehicles qualify. The tax credit is limited to vehicles that are assembled in North America. This eliminates many popular foreign-made brands. But that's not all. In order to receive the full tax credit, your EV must meet specific requirements related to the origin of its battery components. This is where it starts to get tricky. Currently, $3,750 of the new credit is based on the vehicle having at least 40% of its battery critical minerals from the United States or countries with a free trade agreement with the United States. The other $3,750 is based on at least 50% of the battery components of the vehicle coming from the United States or countries with a free trade agreement with the US. It's important to note that starting in 2024, the 40% minerals requirement increases to 50%, and the 50% battery components requirement increases to 60%. These percentages continue to rise in subsequent years. Additionally, starting in 2025, any vehicle with battery minerals or components from a foreign entity of concern will be excluded from the tax credit. Assuming you meet all of these criteria, according to the IRS, you may qualify for a credit up to $7,500 under Internal Revenue Code Section 30D if you buy a new qualified plug-in EV or fuel cell electric vehicle (FCV). But hold on. Before you start imagining a $7,500 deduction from your taxes, there are a few things you should know. The amount you qualify for depends. You see, the government likes to use a couple of words that can make a big difference: may and up to. This means you may qualify for up to $7,500 in federal tax credit for your electric vehicle. But it's not a one-size-fits-all scenario. Here's an example to help you understand. If you owed $3,500 in income tax this year and bought a Ford F-150 Lightning, then your federal tax credit would be $3,500. However, if your income tax owed was $10,000, you would qualify for the full $7,500 credit. Keep in mind, any unused portion of the $7,500 credit cannot be refunded or carried forward to the next year's taxes. Also, used EVs now offer a credit equal to 30% of the sale price, up to $4,000. Keep in mind that these requirements are subject to change, so stay up to date with the latest regulations. We hope this information helps you navigate the world of federal tax credits for electric vehicles. If you enjoyed this video, let us know in the comments below. As always, thank you for watching, and we'll see you in the next video.